So I've now gone through 1 p.m. at London time, just doing a quick spot check across the marketplace. So European bourses are trading lower across the board, with the Euro Stoxx 50 down 0.75%. This is very much just in the wake of some of the latest trade developments we have seen over the past 24 hours. So late yesterday did see US President Trump has ordered the US Trade Representative to consider $100 billion in additional Chinese tariffs, which Trump said was in light of China's unfair retaliation. So yes, US President Trump has ordered the US Trade Representative to consider an additional $100 billion in Chinese tariffs, which Trump has said was in light of China's unfair retaliation.
High.
So in terms of the follow through to Asia, we did actually see a bit of a mixed session. Do bear in mind China remained away from markets due to market holiday, but not really too much woes seen overnight in Asia Pacific trade. However, this has not been the case for Europe, with equities low across the board and 9 out of 10 sectors in the red, with the exception being that of utilities. Have had utilities slightly firm in Europe today, and then also had serious environment support in France from a positive broker move. In terms of actual specific news flow from a European perspective, it's been exceedingly quiet, as is often the case in the run-up to non-farm payrolls. Did see some comments from ECB's Bode, who stated that ECB studies show US tariffs would be significantly negative for the economy globally. And he added that the drop in equity prices and uncertainty over tariffs retaliation already show adverse impact on the economy. In terms of the commodities complex, WTI and Brent crude futures trading a bit softer this morning and fitting with the broader risk tone. FX markets, things are relatively tight at this stage of the session. Most major pairs very much within their recent ranges. Spot gold unable to benefit from the flight to safety, with the dollar, which is around about 90.50 at the moment, just keeping a lid on prices. As mentioned, though, all eyes on the bottom of the hour with the release of the US and Canadian jobs reports. Also a busy day in terms of speakers. We have actually posted a specific speaker headline on the headline feed of the website. That was posted at 11:44 a.m. London time. So looking out for comments today from the likes of Kudlow, Carney, Mnuchin, Powell and Williams today. And do bear in mind, we were meant to have seen the start of this Chinese Commerce Ministry briefing, although no headlines at this stage. So just a heads up, shortly we could see some potential comments from Nordea Bank's Olsen, who has already spoke once today and reiterated rate guidance for a rate rise after the summer. That was after Nordea Bank previously did indicate a hike in August or September. So again, you could see some potential comments from Nordea Bank's Olsen. So just in terms of some initial comments from Olsen, says the outlook for the Norwegian economy suggests that that the key policy rates may be increased this year for the first time in 7 years, as this is a good sign. That's very much in fitting with the Nordea Bank's guidance. So again, nothing new here from Olsen. So just an update, the US Treasury have issued fresh Russian-related sanctions. That's according to a statement. Just looking out for any details as to what specifically they are. Again, that's off note there for the US Treasury and their sanctions on Russia. Just taking a look though at dollar ruble, relatively unreactive to these latest developments. These do appear to be on individuals, so nothing too wide reaching at first glance here from the US. So just do bear in mind we were awaiting any announcements from the Chinese Commerce briefing. I've spoken to a few contacts. It does appear this could be starting very shortly, so we'll be on the lookout for any comments. Of course, this will be potentially coinciding with the release of the non-farm payrolls report at the bottom of the hour, so it could see a bit of market volatility if there are any major announcements from this press conference. So again, just be alert here, as it could get quite messy if this does come out at the same time as non-farm payrolls. So next up, in 10 minutes time, we have both the US and the Canadian jobs reports for the month of March. So as always, kicking off with the US, the headline non-farm payrolls figure, that's expected at 193, previously 313. Then I'll move on to the wages, with the average hourly earnings month on month expected at 0.2, previously at 0.1. Year on year expected at 2.7, previously 2.6, with work week hours expected to remain at 34.5. Unemployment rate, that's expected at 4%, previously 4.1. Then after that, I'll cover any revision to the headline. In terms of the breakdown, manufacturing, that's expected at 20,000. Private expected at 190, with the government payrolls previously at 26,000. In terms of labour force participation rate, that's previously at 63%. Then just moving over to Canada, the employment change headline expected at 18.8, previously 15.4, as measured in thousands. Full-time, that was previously minus 39.3, part-time, previously 54.7. Unemployment rate, that's expected to remain at 5.8%. The participation rate, previously 65.5. Just to put today's release in a bit of context then from the US, we do have a full preview of the event available on the research section of the Van Scork website. In terms of some of the highlights, do bear in mind the trend for non-farm payrolls has remained firm, particularly after last month's largest gain in payrolls in 18 months, with the 12-month average at 190,000, the 6-month at 205,000, and 242,000 for the 3-month. Well, in terms of recent data metrics, ADP reported another solid increase during March. That came in at 241, but expected 205. But as always, it's worth just taking that figure with a bit of pinch of salt. Some do question the correlation with the non-farm payrolls release. Then in terms of commentary for earnings, Morgan Stanley notes that the 15th of the month fell within the payroll survey week in March, which is historically associated with some upside bias in the month-over-the-month change in average hourly earnings relative to the prior month. Whilst RBC notes that this month weather could have impacted the sampling process, and therefore they say they take hour and labour force flows with a grain of salt. But that being said, the poor weather should not have impacted the headline payroll count numbers. But again, that full preview is available in the research section. And just noting some comments from Russian President Putin, just saying that NATO are building up military capacities near the Russian border. And again, that's according to Russian President Putin. So just 1 minute now on non-farm payrolls. Again, I'll lead to the headline expected at 193. I'll then move on to the average hourly earnings, month on month, year on year, then work week hours, the unemployment rate, any revision to the headline, private, manufacturing, government, and labour force participation rate. And then I'll move on to the Canadian jobs report. I'll cover the headline, full-time, part-time, unemployment rate, and then the labour force participation rate. 30 seconds. Ten seconds.
U.S. March payrolls rise 103,000.
103,
Jobless rate holds at 4.1%. U.S. average hourly earnings rose 2.7% year over year in March. Estimate 2.7%.
2.7 for the year on year, which will be in line with expectations. Workweek hours also in line. Unemployment rate 4.1 above expected for the headline. That's been revised higher to 326. In terms of the breakdown, privates, that's 102 below expected 190. Previous revised higher to 320. Manufacturing 22 above expected 20, previous revised higher to 32. Government, that prints of 1, previous revised lower to 6. Participation rate 62.9 below previous of 63. For Canada, that's 32.3 above expected 18.8. With full-time at 68.3, part-time minus 35.9. Unemployment rate in line at 5.8, participation rate at 65.5. Just having a glance over that report then from the US, that was a miss unexpected for the headline. Have the previous was revised higher. Earnings slightly firmer on the month on month, but the unemployment rates that saw a bit of an uptick. In terms of initial reaction, have seen a bit of a dollar softness here. So potentially just going off that headline for now and that unemployment rate. Take a look at dollar CAD there. That was above expected, and the makeup of it was quite good. The full-time very much dwarfing the part-time, which was actually a negative. So as such, dollar CAD has taken a bit of a tumble below 127.50. And in terms of the 2-month net adjustment for the US, that's 50,000 less. That's minus 50,000 for the 2-month net. Just noting some comments here from MOFCOM saying China is ready and will not hesitate to retaliate. So yes, China is ready and will not hesitate to retaliate. That's according to MOFCOM. So I'm just getting the first of these Chinese headlines here. And China is saying the US has misjudged the situation. And they say they are fully prepared to respond after Trump's new threat of tariffs. So no actual announcement here, but China just declaring that they are fully prepared to respond to these tariffs by Trump, and they will not hesitate to retaliate. So just in terms of the overall market reaction here, things have been a little bit choppy. So initially, the non-farm payrolls report was met with a slight negative view, given you see a miss on the headline. The unemployment rate was unexpectedly higher. However, across the 2 months for the non-farm payrolls headline, the previous was revised high to 326, so across the 2 months are still in excess of 200. So we did then see a little bit of a paring back of that initial headline. However, since then we've now seen these latest Chinese comments, so once again we've then seen another reversal, and as such Treasury is in close proximity to session highs. Dollar yen just ironed 107 to the upside as the dollar loses some ground against the yen. And spot gold has also seen a bit of an uptick in recent trade. Equity is not really too sure what to do with all this at the moment. Very much just sticking within the recent range here for the E-mini. Just further here from the Chinese Commerce Ministry, says under these conditions the two sides cannot conduct any negotiations. So China's Commerce Ministry says under these conditions the two sides cannot conduct any negotiations. This is of importance given that despite some of the headlines we have seen this week, some of those concerns were soothed, whereas as it was believed that negotiations were taking place in the background. However, China now just upping the ante a little bit here, just saying that under these conditions, the two sides cannot conduct any negotiations. And just further here from the China's Commerce Ministry, just saying that recently the two sides' economic officials have not engaged in any negotiations on trade issues. So that's the Chinese Commerce Ministry says recently the two sides' economic officials have not engaged in any negotiations on trade issues. This does come, of course, in the context of some speculation that the back-channel negotiations had been taking place, but China is pouring a bit of cold water on that speculation.